So I'd now like to introduce Aisling McCaffrey. Aisling is the director of the Financial Services Consulting Department of Grant Thornton, specializing in sustainability. Aisling has over 10 years experience in the financial services sector, working with key clients across Europe on a range of projects covering business strategy, risk management and sustainability advisory. So Aisling, what role do you think can chartered accountants play in spotting and preventing greenwashing?
Great. Thanks, Dan. And thanks, everybody. It's been I think, great discussion so far in terms of setting the scene and a bit of context as to what we're talking about in terms of greenwashing. So I think, look, from a chartered accountant's perspective, I think Michael and Kate definitely covered it off there in terms of, we're, I guess, trusted advisors to businesses across a range of industries, and really we have a key role to play in a number of ways, I guess, when we're looking at aspects of greenwashing and reporting. As chartered accountants, we cover a variety of roles. If I were to look at kind of the audit and assurance side of the house, at the moment, there are some requirements in terms of sustainability reporting. Most of it is kind of limited assurance, limited to larger companies, but with the kind of increasing regulation, specifically if we were looking at a European context with CSRD, the Corporate Sustainability Reporting Directive that's coming down the track, that's bringing into scope like a large number of European businesses with enhanced sustainability reporting requirements and mandatory assurance. So that's a big step forward in terms of kind of that reporting requirement and the role that we as accountants would have to play in being able to provide that assurance, carry out those audit requirements. I think it's brought in, a huge amount more. The bar has been raised in terms of the expectation for like technical expertise to be able to deliver on that and requirements around that. So I think that's pretty interesting in terms of the support role that we need to play there, and our role in kind of bringing those disclosures through, given that assurance. I think the general idea, as kind of Emma touched on as well, is we want the legislation and the directives that are coming into place. It is with the aim of increasing transparency, I guess, is the key piece, and comparability from a user standpoint as well. So there is a piece about being able to set up kind of robust processes around that to kind of enable that transparency of information. I think from my side of the house, I sit more on the advisory side and less on the audit side for my sins. And I think, there's a number of us in those roles as well as chartered accountants. And from my perspective, the work that I would be doing with clients is around building out the requirements for those disclosures, whether it's voluntary or mandatory. And a lot of it is focused around, looking at the requirements, interpreting the requirements, looking at a kind of assessment of what they have available and helping build out those structures in terms of like a data strategy, a data dictionary. Data is kind of the key piece that underpins a lot of this, especially when we're talking about transparency and where you're reporting outward on one specific number, but ensuring that there's a key kind of consistency behind that in terms of how you get to that number. And what I'm seeing in terms of the integration into financial reporting, I've been looking at some of the Pillar 3 reports from a European banking context, and there's lots of new information flowing through there on ESG risk. Probably the first time we're starting to see that level of information in terms of that portfolio view that Emma's referring to, where you can see in context the volume of lending that's being done by banks across kind of high carbon emitting sectors. So I think that's like a really big step forward in promoting that kind of transparency and comparability element. And I think we as chartered accountants being in those roles where we're working with those clients, whether it's in financial services or in industry, to prepare some of those disclosure requirements and look at how they're integrating that risk into their business. Like, we have a massive role to play there, I think, in enabling that kind of move forward into an environment where we just have access to much better information. And I think that's based on kind of our skill set from being able to look at, for example, the overlap of the financial requirements, let's say, or financial reporting requirements, and being able to interpret those, whilst also being able to, I guess, apply a certain level of logic and interrogation. So that's where I see that really us having a key role, is that level of kind of rigor, and robustness around processes and procedures that sits on the audit side of the house, but also in a similar vein, when we're in advisory capacity, that's the type of thing that we're looking to integrate, is really those the processes and procedures behind everything, so that you can essentially get ownership, sign off, and people are comfortable over figures. Because I guess, look, the key call out is that some of this is a journey, and just reference to that piece around greenwashing. I can see why, having been on the ground with clients, I can see why that is a thing. Because a lot of the regulation is coming through, if I was to take that Pillar 3 as an example, it's coming through at pace. So just the level of kind of travel that needs to go through internally for people to understand what those numbers mean. So all of a sudden we go from having one figure that talks about green lending or sustainable lending to now we're suddenly talking about what percentage of our portfolio is tied to kind of high carbon emitting sectors as defined by, this Pillar 3 template. And we haven't necessarily seen that information before, and it looks like a balance sheet. It's in the same style as other kind of financial reporting disclosures. So there's a bit of a journey that has to travel internally for people to get comfortable around, okay, what does this actually mean, these numbers that I'm putting out there? How do I interpret that, right up to kind of board level? So I do think that's part of the kind of the pace of change. There is a piece around people wanting to take a conservative view in terms of how they come to the answer, for example, when they have to do approximations and estimations, less so about what are you lending into green. Obviously you should know that, but when we're looking at energy efficiency of portfolios, for example, with a bank and their mortgage book, it's trying to find that balance of the data that's readily available versus plugging the gaps with a logic and a methodology that people can stand over, or / not disclosing at all because you don't have the information. So there's a balance around, I guess, all of that. And I feel like us as chartered accountants can kind of sit in the middle of that to help kind of guide the process, give direction on what's applicable or not, but also working with our colleagues in terms of that layering in technical expertise when it comes to some of these metrics and how to interpret them as well. So I think lots of opportunities as chartered accountants, lots of assurance requirements coming down the line that I will be probably steering clear of in my advisory capacity. But I think it's going to be a very interesting time in the next 18 to 24 months for our industry.
In fact, yeah, absolutely. I mean, really clear how important accountants will be both on advisory and the audit side, clearly. And you must have seen your own business in this area just absolutely take off in the last 10 years you've been working with it. Just one question has come from the audience, and I thought it'd be really good to get your thoughts on. It's basically, it comes to an extent how the Pillar 3 requirements will work, which is not directly within the relation of the company, but outside the supply chain and so on. But the question is, how can chartered accountants play their role in addressing greenwashing when it's beyond the corporate level, which is typically the scope that the ACAs have influence over, i.e., in this question, a greenwashing at the level of ESG rating companies, which is beyond what a typical accountant will be able to actually see. I mean, is there anything they can do?
I think it depends on the role you play. So, like, to be fair, in where I'm positioned at the moment from a consulting and advisory perspective, there is a piece where you get access to that information from, say, if I'm supporting a client in terms of, not to get into the weeds of it, but if they're trying to establish, information on their portfolio to disclose outwards, then there is a piece about challenging how you get that information and where it's coming from and the reliance upon that in terms of the ESG rating companies and things like that. So I think there's probably an element of that that kind of feed through coming from a client side and trying to, challenge reliance on external, like the third party piece is absolutely massive. Like, I think the reality is we have big data gaps that need to be filled. There is a role for kind of third party providers to play there, but in the same sense, there's a need for a huge amount of kind of robustness and governance around what you rely on and like your ability to rely on that third party to supplement, kind of your information. So I think like we kind of fit in within that bracket of helping kind of challenge the usability of some of that information. Maybe I don't know if that answers the question, but
yeah, no, and absolutely, and I think it's something which obviously regulators are very cognizant of as well. So lots of scrutiny on those third parties. But thank you very much for that. Fascinating to hear.